Dear ladies and gentlemen, it's a great pleasure to welcome you all to our Team F video presentation. We issue a whole recommendation for Yandex with a target price of $61.13 per share and 9.2% downside from the current price level as of January 18th. We cannot approve this sell recommendation due to high prospects for new directions of Yandex activity. We expect a saturation of the digital advertising market, which will lead to decline in Yandex revenue CAGR 2021-2030 to 16%. We suggest that investors underreact to the fact that Yandex mature businesses are close to the saturation point of the digital markets. It can be a factor of Yandex local overvaluation. We consider that high cost of capital makes Yandex fast-growing businesses to form only 28% of fair value, while they will generate 53% of revenue by 2035. However, following business diversification and expansion in new markets will eventually ensure risk and cost of equity reduction. It could be the reason for unexpected price growth. As one of the fastest growing companies in the world, Yandex works on a diversified ecosystem. Yandex senior business generating profit includes search and portal, taxi and food tech. Mid-level business already showing successful results is represented by media services, e-commerce, classifieds. And junior perspective business includes bets and experiments.
Digital advertising market has already accounted for more than half of the total market and will be saturated in foreseeable future. With a 7% growth in the entire advertising market like non-GDP and an increase in Yandex share in the digital market to 46%, we expect a reduction in revenue growth rate to 11% by 2025. We also forecast an increase in the operating margin to 45% due to decrease of costs and share of intermediaries. A strong breakthrough of Yandex taxi services over the past 3 years and the merger with the Uber allowed it occupy up to 30% of taxi market in Russia. However, the market is filled and anticipated to grow to about 10% per year. The emergence of new aggregators using dumping strategy will increase competition in cities. On the other hand, a leading position and improvement of technology ensures an increase of operating margin to 12% by 2025. Yandex food delivery services, which are integrated with Yandex Taxi app, also show high growth rates since launching. We expect food tech business will grow with the CAGR 2021-2025 by 36% due to leadership in online food delivery market.
Russian e-commerce reaching 27% historical revenue CAGR is highly competitive and risky field. The main trend is that people want the next day delivery, thus e-commerce needs high-tech warehouses. Yandex already has 3 such centers, and in only 1 year Yandex Marketplace became one of the top 10 by revenue in Russia due to the perfect match of marketplace and aggregating agent. We forecast Yandex e-commerce to turn profitable in 2026, showing 24% revenue CAGR. Mostly media services revenue comes from Yandex Plus subscription service providing video and music streaming as well as cashbacks and discounts for other Yandex services. Kinopoisk has a game-changing unit, Yandex Studio, giving an ability to create and film their own exclusive content as major players do. Yandex Music popularity key factors are the AI-based recommendation system, podcasts, and integration with almost every Yandex service. Substantial part of Yandex Classifieds revenue comes from Auto.ru. Yandex key competitive advantages are acquisitions of regional classifieds companies, increasing reputation and recognition of companies' directions both in domestic and cross-border market. Bets and experiments include the following. Firstly, Yandex Cloud computing services. We forecast to reach 2 billion rubles in 2025 with 65% CAGR. Secondly, stable geolocation services line is now full of new promising Yandex products, such as Yandex Fuel and Yandex Auto. Finally, Yandex is out of the competition in future cutting-edge self-driving cars market, already testing 130 cars in Russia, Israel and US.
Yandex leadership in cutting-edge technologies is mostly achieved through corporate governance principles. The board of directors and management team features match the best practices. The Public Interest Foundation gives a compromise solution that minimizes the government risk. 87% of the shares are held by public shareholders such as Invesco Ltd. Yandex's uniqueness determines its ownership structure, with A and B shares that helps to stimulate managers. The strong social and environmental perspectives highly improve Yandex's reputation. The key points are Yandex's best employer position in Russia, average HSE ranking, a big amount of social projects like Помощь рядом, and moving to electric cars.
Emulating our industry analysis, we see that the saturation of Yandex's main segments, along with low initial weight of fast-growing businesses, will lead to a decrease of 5-year revenue CAGR to 15%. Also, we expect that search and portal will remain the most profitable segment in the foreseeable future, accounting more than 98% of total operating profits. Profitability has declined in the last 5 years. EBIT margin fell from 30 almost to 15%, mainly due to launch of new businesses and expenses for advertising and marketing. The ratio of operating cash flow to revenue is more stable because of the increasing value of share-based compensation expenses and amortization on capital lease. Expansion to new markets led to 5-year average capital expenditures to revenue ratio around 18%. That's significantly above industry's average, and we expect this further increase up to 20% in 2025. All these factors support our view that Yandex free cash flow to firm will increase from 16 to 19% of revenue in the next 5 years. Also, we see that Yandex has excess assets, including excess cash, short-term deposits, and investments in debt securities. Totally, these excess assets enlarge the stock price by $9.72 according to our calculations. A significant part of these assets came from the issuance of convertible bonds in first quarter of 2020.
We construct the DCF valuation model using ruble's cash flows and the ruble discount rate, because 92% of Yandex revenue comes from the Russian market. Based on our industry forecasts, we decompose the fair value of Yandex into the value of individual parts of each business, and received the digital advertising market makes up about 60% of Yandex value. Moreover, we consider another scenario with historical growth rates don't taking into account digital advertising market saturation. In this case, the value of Yandex search and portal segment increases from $30 to $55, which increases the valuation of Yandex shares up to $85. We are sure that the prevalence of such opinion among the market participants could be the reason of overvaluation. We also use the real option model because of high value of Yandex venture projects, which added only $1.5 to Yandex share price, as the real option starts to add any value from 2030 with Yandex self-driving cars market growth. The uncertainty in IT companies' cash flow forecasting allowed us to give a solid weight to the relative valuation model. We compared Yandex P2S, P2E and EV to EBITDA multiplicators with digital advertising competitors. As you can see, Yandex has a solid premium over its competitors. To consider differences in fundamentals in our relative valuation, we use a regression approach based on 20-year panel data of Nasdaq software and IT companies. It shows that now Yandex estimated exactly by regression, while in previous years company was solidly undervalued. The main factor of Yandex growth in this model in the last 2 years is the decelerating of cost of equity. This fact convinced us that Yandex is about to become a sustainable company with declining risks. Finally, our 12-month target price of $63.95 with interval from $50.7 up to $79.4 was calculated as 30% DCF analysis, 30% relative valuation model, and we also considered discount dividends model with 20% weight to take into account minority shareholders' interests. On the one hand, market overvaluate Yandex main business's growth perspectives, which leads to a local company overbought. On the other hand, the ability to generate stable cash flow and high cost of equity makes us to issue a hold recommendation for Yandex.
Yandex has a stable business and good prospects, so we recommend hold. However, our proposition is subject to such important risks as economic growth risk that strongly impacts search and portal business, risk of tightening of competition in taxi, food tech and e-commerce segments, and management inefficiency risk due to executives' overconfidence.